Hi, Saif. Thank you for coming on to the show.
Thanks for having me, Andy. Looking forward to this.
I am looking forward to this. In fact, I am really looking forward to this. Not only because we haven't caught up for a little while in person, but because I just love chatting about property with you, Saif, every time. And I love hearing you talk about property. You are one of the few people I give a lot of time to in that very crowded, very busy social media space. I look and listen to what you say quite intently, and I really enjoy sort of hearing your opinions on stuff. So I am super excited today to find out how things are going, where you're up to, what you're doing, and get some of your opinions and views on what 2023 and maybe beyond looks like. Now, I'm sure a lot of our listeners know you, Safe, but maybe for anyone who doesn't, or maybe just to bring us all up to speed, can you give us a bit of a kind of rundown on who you are, where you are, and what you're doing these days in the property space?
Yeah, sure. I'm really excited for this, and I think you're absolutely right. It's speaking to people and getting opinions that forms people's opinions and decisions in their day-to-day lives and property businesses. So hopefully, people listening to this can take away quite a lot. So for me, so background is in healthcare. So I was a pharmacist, started off as a pharmacist, had a pharmaceutical business, made a bit of money from that, and just very vanilla. Started off with a simple two-bed flat in Salford. This was at the time. So what I did was I looked at all the big building projects that were going around, and I said, right, well, let me buy something that's second-hand flat, for example, at 30% less than what everything else was selling for on the on the open market as a new build, and I just held it, and I held it. I bought it in 2015 for I think it was 91 or 92,000 pound at the time. I refinanced it in 2018 for 130, and today it's worth 150, and I've done nothing to that, no refurb, no nothing. So that to me was just a little glimpse of what property could do for you. But fast forward to today, so I bought that in 2015. 2017 was the next property that I bought. I started off with student HMOs in Lincoln. So it was your standard kind of um, three up, one down kind of four-bed terrace house sharing style. And I paid market value for them. That's the reality. Your first deals are not your best deals, and that's absolutely fine. But I say to people, timing in the market is better than trying to time the market itself. So again, I paid, just to give an example, I paid 150 grand for one back in 2017. I've recently sold that for various reasons that I can go into for 190,000 pound, and that's within a period of sort of 4 to 5 years. And I've had a rent roll of nearly sort of 50, 60,000 pound over the years net on it. So I didn't do too bad on what looked like a pretty vanilla deal. So I don't discount necessarily vanilla deals if you're starting out, right? Now, fast forward to today, what does our property business look like? It's quite multifaceted. So, just to keep it simple, we have a portfolio building business which includes sourcing acquisitions, project management, and property management. And it's not sourcing business, it's not a project management business, it's not a property management business. It's an all encompassing business where if people want to build a portfolio, that's what we do for them basically. From start to finish, we set the strategy. On the flip side, we've got a property trading business, so we're buying and selling properties quite frequently, and we've also got a property investment business, which basically is our very much our long-term wealth building vehicle. So that's kind of how multifaceted our businesses are, but they all work together and they all kind of push in the same direction.
What's so interesting about everything that you've done and do, Safe, I think, is that it's so intentional. Even your first property, you were really sort of intentional about what you were buying, trying to get in at the right value, make money, selling your HMOs. There's clearly an intention there, and that serves like a bigger plan, which I'm really excited to talk about with you. And when I look back at my own, I suppose, experience and the way that I got started, it was quite different for me, in all honesty. Like, I wasn't intentional, I was quite accidental. I liked the idea of buying and owning property, but I've had to really work at being a businessman, and I feel like this is something that is naturally part of you. And that's what I enjoy listening to you, when you're speaking and getting from you. Everything you're doing seems very intentional. You've thought about it, there's pros and cons to it that you've no doubt considered. But it's very strategic, and I'm really keen to get more of this out of you today. So before we get into some of the detail about what Letco and everything else that you're doing looks like right now, can you talk to us a little bit more about the HMO stuff? Safe, obviously with the HMO podcast, I'm a huge fan of podcasts, and anyone who watches the video of this late will see a big smile came to my face as soon as you said, well, the next property I bought was a student HMO in Lincoln.
Yeah.
But tell us about sort of your relationship with HMOs, and how important and what sort of position they've taken in your broader portfolio and what that means to you and your business today.
Okay, strap yourselves in for this one because this is gonna be a lot. But let me start top down. So if we look at HMOs with a very much a helicopter point of view, right? So HMOs are a great hook for people that are starting out in property or in property, especially when they look at it from a cash flow point of view and an income perspective. It could be people wanting to replace their income, people wanting to build a business of, in terms of cash flow. So it's a great hook. Now, the problem that happens when you look at HMOs from a one-dimensional perspective and a very much a numbers-driven perspective is it drives you to the wrong sector within the HMO sector, which very much you start off looking at maybe student HMOs, higher end HMOs, and you end up getting very much numbers driven and say, yeah, but the numbers aren't as good here. I can't recycle as much out. I can't get as much cash flow. Let me start looking at non-Article 4 areas. Let me start looking at more what I call blue collar areas, for example, or whatever you want to call it, really, just the working class areas. Now, the problem with those is there's so much oversupply because obviously there's no Article 4 in those areas. There's not as much demand because they probably don't have universities and they're not specifically a city set up for HMOs. So, and the other point is your one bed flats and your HMO prices are very much similar. So it really is a case of people would rather go for a one bed flat than a HMO. And that's what my drive was. It was very much this is great on paper in terms of numbers. Let's scale this. So I started off in an Article 4 area that was very mature. I quickly hit a ceiling because it was like I can't extract value here anymore. So I can buy it and deploy my cash, but my cash is dead for a couple of years until I refinance. Um, so what then happened was I basically got to a point where I was buying HMOs in what I considered at that point the wrong area. I wasn't patient enough. I was waiting for this income to come through, and all of a sudden it was so capital intensive, but there wasn't the income coming from it, and then ended up having to reverse that strategy and sell some of them to free up capital, which is what got me into trading. But just coming back to my point, I think HMOs can't be generalized. I think HMOs need to be split and subdivided, right? So you've got HMOs from a point of view of ownership as student HMOs. You've then also got the professional HMOs, and even professional HMOs can be divided between, mature Article 4 areas, non-Article 4 areas. For example, HMOs in London work so well because of that gap between a one-bed flat and a HMO room. So the demand is sky high over there because there's a massive rental shortage on the flat market and affordability for one-bed flats. And then you've currently got sort of what people call supported living, social housing, where you basically lease it out to a provider or the local council and they kind of guarantee the rents. And then you've also got we talk about it, but it's there, it's part of it. It's obviously the social housing front where you're actually bringing in tenants that are on DSS or benefits or whatever. So that's the kind of four ways in terms of ownership. Each has its pros and cons. And then you've obviously got HMOs from a rent-to-rent basis, which again has a lot of pros and cons. And I actually really like this model, especially in today's market. I think that model, you can call it rent-to-rent, you can call it lease-to-lease, whatever you want. But that is a very good model, especially in today's market, to be looking at. So that's how I categorize it, pros and cons across the board. But traditionally, people would always go for the most recyclable way for their money and the highest cash flow. On paper looks great, in reality it's totally different, and that's where the love-hate relationship kind of gets developed.
I think that is a great way to summarise working in HMOs can often be a bit of a love-hate relationship. And you framed it so well, and you actually framed the very problem that I had, which was buying stuff, finding it was increasing in value, I was getting more and more capital left in, and I was getting more frustrated with the inability to grow and expand my business. Even raising private finance, which was something that I started to do, it didn't necessarily make it any easier because I was still getting capital stuck in deals. And so actually, for me, it was looking at building an alternative business, maybe something that complemented what I was already doing, so I could use the same skill sets and tap into the same locations and contact and network, which was building the agency. A lot of that was rent to rent for me, but I think you really highlighted some of the things that I have seen over the last few years, and I think you really put a full stop on what's going on right now, which is, look, this market has changed. It is not the same market as it was sort of even 3 or 5 years ago. And I think we've all got to be prepared to either change our expectations, or compromise a little bit, and just look at what we want to achieve and try and find a slightly different way to do it. I think there are still, in my opinion, too many people out there trying to, have their cake and eat it. They want the great deals in the very best location with the very best tenants. They want all the cash flow and they want all of the capital out. And that is a really, really, really dangerous place to be, because actually, for most people, that means sitting on the sidelines and just waiting and waiting and waiting. And you said it very early on in today's episode. Actually, time in the market, is pretty much going to trump anything, and I completely agree with that. I mean, when you look at the HMO market at the minute, Saif, do you think it's fair to say that things have changed? It's generally a less profitable investment strategy than it was. It's often, I see a lot of people, certainly people selling courses, touting it as like the only way to make money in property. I don't agree with that, but what's your opinion, sort of broadly speaking? Is it still a place where you can professionalize it and make a lot of money, or do you think diversification outside of the HMO strategy into other elements of property investment is a necessity to actually make money in this industry now?
Yeah, so I think people have a very one-dimensional view of things. So their one-dimensional view is, my strategy is HMO. So I want to quit my job, I want to have my capital appreciation and my cash flow all from HMOs. And the problem with doing that is it's quite risky, because you put all your eggs in one basket. I think what people should do is very much split their strategy from a point of view of, this is my day-to-day cash flow and my living, and that could be a trading business. And this is my long-term capital appreciation, basically, where I'm going to get my long-term wealth growth. And I think you should really be separating them two out. Now, on the flip side, the cash flow side of things could be your day job, which is absolutely fine, by the way. I don't advocate people leaving their job and all the rest of it. I think that's still fine to be in a day job. So you can have a day job. You can have another non-property trading business, for example, which throws off cash flow. Or you can have a property trading business, which is more of a service-based business, i.e., if you've got a lettings business, a rent-to-rent, whatever you want to call it, basically. But that's a trading business. You put time and effort, and you've got team members and everything else, but that throws off your cash flow. And then on the flip side, you can have your capital growth strategy, which is what I call the blue chip HMOs, right? So the blue chip HMOs are very mature cities with universities where you're buying HMOs at what I would call not necessarily a premium, but there's a premium attached to them. But that stuff, over the long term is going to go up in value. In terms of return on capital employed, it's not as good as buying something else that you're going to create into a HMO. In terms of recycling your cash, it's not as good. However, long term, that's going to come good. In 10, 20, 30, 40 years, you are absolutely confident that's at least would have doubled, like at least. But separating them two out is really, really important. And then if you don't have to rely on the cash flow from here, it's beautiful, because it can compound, it creates all this long-term wealth for you. And then your real day-to-day dividends, whatever you want to call it, income, etc., your salary comes from this trading side of things, or your job or business or whatever. So I think it's really important that people separate those two things out before looking at setting a strategy in general.
I completely agree with you, Saif. There's a chap called James Sinclair. He came on the podcast about 12 months ago, and James is a really interesting person, very successful businessman, not necessarily a HMO property investor. He's very much in the commercial property space, and he owns other businesses, but James talks quite publicly about the importance of having that trading business to then create cash that you can then invest in your assets, and you said it yourself, and it's something that over the years I've almost had to learn the wrong way round. I started buying, it got increasingly difficult, it really slowed down, so I built my trading business. As that built up, I was able to pick up buying assets and realize the value of having a trading business. And I think watching you and build your businesses, I've seen you do the same and really prioritize that. And when I look around, I see a lot of successful property investors, people who own a lot. They almost always do have these trading vehicles which throw off a lot of cash. So I think you've said a couple of really interesting things there. And I think also that point around, look, the blue chip HMOs, that's kind of what I see as my prime student portfolio, what I think my kids one day will be happy with if I give them not too many problems. It's going to rent year after year. I'm happy giving them that. I probably wouldn't be as happy giving them some of the other stuff, and I totally agree. But the path isn't always straight, is it? You sometimes you've got to do a bit of this and a bit of that to eventually get there. And actually, I think it's okay to say now that that's probably the better strategy for a lot of people. Start here and work your way towards that. It might take a little bit longer than you thought or you hoped, but it's probably actually the quickest and most efficient route to it. What challenges do you think lie ahead, though, Saif? Because there's no doubt that we are in quite an unusual time. I want to talk to you about the pros as well,
Yeah.
and I'm sure that you've given these a lot of thought. But what challenges do you think are ahead? I think if we understand the challenges, it makes it easier for us to actually plan around them
Yeah.
and build better businesses. What do you see, lying ahead that's going to be difficult for us and for property investors?
Yeah, so I mean, look, there's going to be always loads of challenges. In general, whether you're running a business, whether you're doing property, I think property investors have it the worst out of the rest. And I'm not saying this because I'm looking for people to pity us, but I think we do have it hard. But I also think because it is quite hard that and I will go through all the challenges that, like you said, there's going to be positive. So let's look at the challenges first and foremost. So regulation is obviously quite a big one, and regulation could be across the board. So that could be the EPC regulation that's going to be coming in, which is quite a big one. Some people are still, is it going to come in? Is it not going to come in? Are they going to do a U-turn? No one can determine that, but I think you really need to start planning that in. Get a spreadsheet together of all of your properties. What currently are the EPCs? Where do you need to get them to? And start building in and looking at what the cheapest ways possible over time to factor in, some capital cost towards basically bringing the EPCs up. Just bearing in mind also that EPC criteria could change. So what is today a D, tomorrow might either be an E or might be a C. No one knows. We had a property that we did everything right, ticked all the boxes, electric boilers, etc., and it went from a D to an E. So you can't call these things. But that's one thing is the regulation side of things. It could also be things like licensing, selective licensing, all sorts of stuff. But the regulation is one big factor that people need to start thinking about considering. And also compliance. Compliance is getting harder and harder for landlords all the time in terms of the certification you need, especially for letting agents, what they're having to do now as well. But ultimately, it's the landlord's responsibility. Tax, I think, is going to get worse. I really do. I think tax is tax at the end of the day. We live and die by it. But I think there are some clever and creative ways that you can try and minimize tax. Don't complain about paying tax because it's a good thing. That means you've made profit and you're contributing towards society and everything else. But there are ways that you can minimize that. And I'm not saying avoid, but I'm saying minimize. So there's certain things you can start to look at and structures and stuff. Interest rates, I think, is probably one of the biggest factors playing on everyone's mind because it's quite low hanging fruit for investors to see, and it's quite tangible. This is what my cost is. This is what my income is. My cost is going up. Yes, although my income's going up, but my cost is going up quite significantly. So I think challenge-wise, those are the three challenges that lie ahead, and I think it's only going to necessarily probably get worse.
And you're right, and I agree with them all. And actually, I think interest rates, you're right, is the low-hanging fruit. It's what we see, it's in the papers. But actually, I think it is the legislation bits, these changes that can come about so quickly, end up costing us so much, or potentially making some things unviable. I think that's really, really scary. I mean, just the idea of the rental reform bill and some of the stuff in there, some of the changes that might be made to being able to remove tenants, not being able to put tenants on fixed term agreements, which in the student market is quite fundamental. So these things are definitely playing on my mind. I see them as huge challenges. And I'm an eternal optimist, so I do see the opportunities with them as well. I think before we quite get there, I do think, unfortunately, that the book will ultimately sort of stop with the tenants. I think it is ultimately the tenants that will pay for this, because I do think some landlords will find that this is all just a bit much. We know landlords are leaving. Significant numbers of landlords are leaving at the minute. There are opportunities as a result of that, but I think that that's going to put more stress on the PRS. I think that puts rents up, at a time when people are already struggling with cost of living.
Absolutely.
I think, unfortunately, these short-term politics will have a significantly detrimental impact on rents, and it will be the tenant who, in the long term, ends up paying. But that's just my 2 pence worth. Take us to the good stuff, Saif. What can we do about this? What opportunities are there for us as investors, as landlords?
So that's quite a bleak picture, and it is quite a negative picture. And tie that into the headlines of house prices going down and all the rest of the crap that the media is trying to obviously force onto us, right? And it's not looking great. However, and this is the most important point probably to take out this whole podcast today, is the strongest will survive. This is basically a marathon and absolutely not a sprint. So it's about being resilient. It's about being strong. So yes, we have all of this stuff happening. Now, it's putting a lot of people off being a landlord. It's putting a lot of investors off either buying new properties or selling their current properties if they're current landlords. And what that's ultimately going to create is, so the demand is not going down, basically. The demand is actually going up. So in terms of the amount of people that want to rent accommodation, rooms, houses, flats, etc. That's always going up. So what it then starts to create, and I've been quite vocal about this, but it's creating, and in business we call it very much a moat, right? So having a moat where you've got water surrounded by it, basically no one can get into your fortress, right? So having a business where it's basically washed away a lot of the wannabe landlords or the investors that were quite, I'm going to say this in a nice way, but were quite weak, in terms of it couldn't hang on, and it's kept the really strong-willed, strong-minded people that do this day in day out. They don't care about the short term. They're very much long-term thinkers, which is what the government's always wanted. They've always wanted to kind of push for, institutionalizing the kind of PRS sector as a whole. But what that presents is, you're absolutely right, rent's going up because obviously they've got less choice, especially on the market. Rental homes getting converted back into owner-occupier homes. And also it creates an environment where basically, yes, we're going to have all of this stuff in the short term, but over the long term, the strongest will survive. And there's not going to be as many rental properties available. Rents are going to push up, and you're going to have a commodity that is in massive, and I'm saying massive, demand over the long term. It's only going to get worse and worse in terms of from a tenant's point of view. Now, are the government going to step in? Are they going to subsidise things? Are they going to help? There's going to have to be something that's going to give. And similar to if you rewind back to COVID 2020, when everyone thought the world was going to end, and all of a sudden government stepped in and looked like the heroes, something's going to give here. So I think as long as you maintain your faith in the UK economy, the UK government, I think we know that over the long term things will come good, because this is a necessity. People have to live in homes. It's not a luxury. So that's what gives me confidence in the market over the long term.
I think it's very good and very, very sound and very logical advice, Safe. To me, it looks like, if you zoom out, take that helicopter view again, it looks like they're just giving this tree a big almighty shake, and hoping a lot of the rotten fruit falls off. Unfortunately, it won't just be the rotten fruit that falls off. Some of the good stuff's going to come off as well, because some landlords who mean well, do a good job, will just find it a bit too stressful. And in honesty, there are people out there who've made their money. They might think, you know what, there is an easier life for me. I don't need all this red tape. I don't need to jump through all these hoops. I just want to go and put my feet up and actually enjoy it, which I get. But you're right. And I think if you combine this with, again, some of the really good, well-located stocks, use student stuff as an example, that it's going to be such a valuable commodity, isn't it? Such a limited number of competitors. If you ran an ice cream business and you knew all this was going on, or it was maybe a tough time ahead, but at the end of it, there was going to be, as opposed to 5 ice cream shops on the same street, there was maybe just going to be 1 or 2. You're probably thinking, great, actually, if I can just get through this, if I can have that long-term view and maybe apply myself to doing this as well as we possibly can, the future could look really, really bright. I think now more than ever, you've got to take that approach. I think if you don't, and you aren't, and you focus too much on the negatives and on those challenges ahead, I think it's going to be a really difficult industry to spend your time to make money. But if you do see that, and you can have the faith in, like you said, the British government, the fact that there's only so many properties, we're in Ireland, and all of this stuff, I think the future does look really positive. One of the things that we've done, and this has been a very strategic decision for me, and I've talked about it a lot on the podcast because I wanted to share this, and this evolution of my own business is looking at different types of asset classes as well. I love the HMOs, I love the stability of the cash flow, but there are definitely limitations to it, and the creation of capital is becoming increasingly difficult. So development has been an obvious alternative. Of course, that comes with its own risks, but actually what's happening right now, and I said to you before we kicked off, the first thing I saw online this morning was an article in the Times, which was a report, I think it was either Knight Frank or someone else, about the state of the commercial property market and how significant the values have come down in only the last 6 months. And that, for me, is another huge opportunity. And I'm not saying development's for everybody. It's definitely not. But one door can sometimes close and another door can open. And I think as property investors, like any business owner, we've got to be on our toes. We've got to be agile. We've got to be prepared to sort of look at what's happening, adjust our own strategy, change our own plans, change our own expectations. And I think every time I talk to you, it's this sort of business savvy that just oozes out of you. You're thinking about all of this stuff that's coming, you're thinking about the challenges, you're thinking about the opportunities, and you're really intentionally building your businesses around what you think the future could, should, and needs to look like. And I guess that brings me on to a question that I want to ask you, which is, what you think it takes to build a property business, in 2023. We've talked about the opportunities, we've talked about some of the challenges, we've talked about some of the different strategies, but on a granular level, and as an individual and as a business owner, more so a business owner than a landlord now, what do you think it really takes to build a property business, a successful property business these days, Saif?
Yeah, so really, really good question. And I think so. One of my absolute hates is when someone asks you what your strategy is for properties, right? Because they misuse the word strategy, and someone says, HMO or single let, whatever. And I think we can't be doing that in today's day and age. You've got to have every single tool you've got. Even though, like you said, I might not like development or might not like, whatever, single lets or whatever. Anything that comes across your desk, you should be able to analyze it and have at least a team of people, whether it's mentors, professionals, whatever it is, or a mastermind group, whatever it is. But you need to have a team of people that can help you analyze things or guide you along the way. So I think it's really, really important that people in 2023 broaden their knowledge horizon, broaden all the tools in their toolkit, and start to look at things from very much an openly looking at things rather than being very closed off if be so focused on one thing. This is my only strategy. That worked really well before. That doesn't work so well anymore. So I think people need to be very, very much open-minded looking at things. I think if you're going to run something where you're either looking at building up a property portfolio in today's day and age, you've got to do one or two things. It's either you've got to build up a property portfolio that's, I'm going to say, relatively passive, but then, as I said, have kind of on the side pretty much a trading business. So maybe, for example, build up a portfolio of rent to rents, right? So I don't know, go into a landlord, especially in today's pain that's going in the property sector, go into a landlord, trying to agree a single let rent, and then trying to see how you can maximize it either for service accommodation, HMO, whatever, but a rent to rent portfolio that throws off cash. That cash can then be recycled and utilized to buy your long-term wealth building property, single lets, prime HMOs, whatever you need to do. But make sure that whatever you're buying is not going to take up your time, because your time needs to really be 80% focused on the trading business, 20% on the investment business. And I think that's a really, really sustainable long-term way of building a property portfolio in 2023. Or that trading business can be whatever. It could be a digital business, as we talked about previously. It could be a really well-paid job if you're working in the city or whatever it is. But I think in today's day and age, it's very, very difficult in 2023 to be able to go out and say, I'm going to raise X amount of capital and I'm just going to focus on buying single lets or HMOs or commercial res or whatever, because you need that other source of income. And most people that I've personally seen that have either not done so well or gone bust as a result is because they're depending on one thing. I'm a developer and I'm not going to get paid until 1 year, 2, 3 years until these developments finish, and I've got no cash flow in the meantime. You might be the best developer in the world, but if you've not got cash flow, that's the lifeline of any business, right? That's key.
I think developing is so scary, and for me, there's no way I would have ventured into development if I didn't have several businesses that were cash flowing, that could pay the bills, that could handle a rainy day. And it does concern me when I see people, move straight into those sorts of things, attracted by the potential capital returns, but disregard the importance of very fundamental things like cash flow. And again, I think it comes back round to really recognizing that things have changed now. Actually, we have to be professional investors. We've got to be business owners if we want to do this. Buying 1, 2 properties or just kind of stumbling into it, I think that those days are gone. I think I said a couple of times on the podcast about 12 months ago that I thought that was over, and you've got to be a professional investor if you really want to make this work. But I think the changes that have come about this year and the proposals with the rental reform bill, again, have just really twisted the knife. And now more than ever, I think it's a case of you've got to be a good business owner first. You've got to really be able to be strategic, understand your numbers, like you said, analyze potential deals, have contacts, people that you can rely on to give you advice. I think it's the only way to get through this. But I think if you do it, these opportunities, there'll be fewer people looking at them, and I think that bodes really well for the future. You're one of the few people, Saif, that have stuck with this. I have been doing this 13, 14 years, maybe a little bit longer, something like that, and I've seen a lot of people come and go over that time. You're one of the people who's stuck with it and grown and grown and grown and grown. There's obviously something that you love about this, but obviously it's not all enjoyable. On a personal level, what do you love about building property businesses, Saif? What is it that switches you on? What do you enjoy about it?
Yeah, so I think for me, like a big part of it was getting a deal done, right? So doing a deal. A deal could be a rent to rent deal, purchasing a deal, selling a deal, whatever it is. But doing a deal, just in our nature as entrepreneurs, it just feels good. It gives you that kind of adrenaline rush, that kind of, endorphin release as well. So for me, it's really, really key to be able to kind of get deals done. So getting things done is really important. I also think working with a team and seeing things grow without you being involved is probably one of the best feelings you can ever feel. And I'm assuming I relate this back to, I don't know, having a child that grows up and does things independently of you, probably, but it's a very similar kind of concept. It's if you can grow a team, grow systems, grow processes, and the time that you see things happen without you and you think, I wasn't involved in this, is amazing. Like, that is probably one of the best surreal feelings you can have, and that's when you know you're growing a business and you've not grown a self-employed job, as I call it, right? So for me, these are the little things, and being able to lead a team. Like, one thing that I didn't realize before that I have, which is really, really good, is good crisis management skill sets. So we've had obviously a Black Swan event. We've had loads of things happening over the last 3 years. It's been quite choppy water. So for me to be able to kind of gather the team around and say, look, it's not going to be easy. There's going to be tough times. We're going to need to make budget cuts. We're going to need to strip certain things back, consolidate, and just become more profitable business. We went through times where it was all about growth, and then we went through times where we stripped that all back, and it's like, no, this is about consolidation now. It's about the bottom line, net profit. I don't care about all this fancy stuff. Just strip it all back for now until we see how we're going to get out this tricky period. So that's been a really, really interesting time and just a fulfilling time to be able to be in business.
I suppose I'm thinking about myself when I ask you this question. Do you enjoy that turbulence, that uncertainty? Say, is there an element of that you also thrive on and get some sort of personal satisfaction for having to handle them and then sort of figure a way out of it all?
I don't enjoy it. I'd rather it doesn't happen where possible. But I think what I enjoy is after it's all said and done, because it's quite stressful and you go through some, pretty difficult times. But I think once it's all said and done and you look back and you think, we steered the ship really, really well here. It's almost like, playing football and being a captain or whatever it is you want to call it. It's a leadership role, right? Being able to lead and being able to come out of it and making good, sound decisions that have reflected. And don't forget, at the end of the day, everyone that we employ, we're basically paying for that. So the business is all about basically paying people, their livelihoods depend on it. The economy depends on all these small businesses. The economy is mainly made up of SME businesses. So when you start to put it into context that your business and what you're doing is helping put food on other people's table, and that's quite scalable and sustainable, it's a really, really good feeling. But also you feel a sense of responsibility that, especially as you grow the team, it's like, I'm responsible for all these people. I've got to work hard. I can't sit and watch Netflix necessarily in the middle of the day. I've got to be working. And you probably have this as well, Andy. You could probably go retire today if you really, really wanted to. But you need to think about what's holding you back from going to retire. And it's probably because you'll feel this sense of, I need to be doing something. I feel like I need to do something. And for me, I realised quite quickly, for me, it wasn't going and sitting on the beach somewhere. I don't enjoy that. I like travelling, but I like travelling to work. So I take my work wherever I am. And yeah, that's kind of a sense of satisfaction for me.
Yeah, very similar in that way, Safe. I'm not designed for a beach at all. Much more at home in the mountains, but I can't sit still. I can't stop thinking. That's just me, and I tried to resist that for a long time. And I think I was trying to resist it when I had a job without knowing that that this was a part of me, and that's why I got so bored of my job. I was a physio, and actually, it is the uncertainty and the turbulence and the risk of not getting things right. I think risk for me is one of the most enjoyable things about this. Calculated risk, don't get me wrong. I think there's certainly risks that I would definitely be uncomfortable taking. But I like the fact that, on a day-to-day basis, there's an element of risk. Should we do this deal? Should we change our services? This might backfire, but actually this might be really important for us in the future. I enjoy all of that stuff, and I enjoy the whole mix of it all. And I've got a few businesses now, like yourself. I think property is the one that just throws the most at me, that I just don't always know the answers to. And in fact, nobody knows the answers to. We're staring down the barrel of something. We don't quite know what that is at the minute. What does the property market look like in 12 months? We don't know. But I'm quite excited to just figure it all out and give it my very best. And for me, that's what I love about this, probably more than anything. We're not highlights reel on the show, though, Safe. As you know, we like to keep it real with people. On a granular level, you're a business owner, you're a property investor, you're a landlord. What don't you enjoy? What do you have to deal with on a day-to-day basis that you don't enjoy, that's very much a part of having to do this?
When processes don't go according to plan, basically the firefighting element is what I don't like. And to a degree, you're going to have to do some firefighting. But if I'm 80% firefighting, 20% strategic, that's my worst nightmare. 20% firefighting I can handle, 80% strategic, that works. But sometimes that has to happen for you to understand where the gaps are in your business, and then for you to troubleshoot and zoom in and say, right, okay, this is what we need to improve on. Let's go back, map out the whole process, map out what we're doing wrong to try and understand that, and then basically recreate it or just amend it and tweak it slightly. But for me, my pet hate is going from 20% reactive to 80% reactive. Basically, that is absolutely my pet hate.
It's funny as well because that you mentioned there, I think, is one of the things that I see with a lot of people at the earlier stages. They get drawn into the sort of 80% firefighting, 20% on the strategic. The strategic stuff always happens after the firefighting. And you're right, there are times in business when that's just the way it needs to be. You've just got to do with it. Some things come, from the left field, and you've got to deal with it. But I think it's really important as a business owner, and if you want to succeed in this industry, that when you have to say, actually, enough's enough. We need to put something else in place to make sure that this doesn't happen again. We've got to stop this pattern. We've got to break this cycle. Saif, I've got one more question for you today. But before we get there, can you tell us what you're going to be focusing on this year? As a business, what can we expect from you and from Letco and your businesses?
Yeah, sure. So I guess more of the same in terms of what we were doing previously. We've got a heavier weight to trading this year, so we're going to be trading a lot more properties. We're still going to be investing, by the way, because we're not dependent on the investment income necessarily. So even if interest rates are higher, but comparatively, the rents we're starting to see go up quite dramatically as well, which is obviously trying to keep up as much as possible. But for us, it's about we're going to be doing more trading, still going to continue investing where possible, where we see the good deals, and then also focusing on helping clients to build portfolios essentially from start to finish. And as I said to you, a large part of that is going to be very much we know who our client base is, and our client base are busy professionals that have enough of an income where they need, that surplus cash needs to be invested. What we know very well is the people that, for example, might have saved up £30,000 or £20,000, £40,000 are probably not our ideal customer base because they're going to be too dependent on that income and they're not throwing enough cash to be able to kind of compound what they're doing. So again, for us, it's always about being focused in the right areas, but also being able to have this kind of agile approach in general.
I think it's a great approach to business. I think right now, 2023, I think understanding your customer avatar has never been more important with so much noise and so many choices. And I suppose we've kind of lost almost the ability to waste anything now. I think we've got to be really careful. So I think knowing exactly who you want to talk to and delivering exactly what your customers need is so, so important. And I think actually that applies to whether it's investors, whether it's your tenants, anything. But I think more so than it has been in the last decade, that is incredibly important. One final question, Saif, for anybody who's perhaps at the beginning of this process, just starting out, maybe they've got a bit of cash that they've got from retirement, a pension, inheritance, maybe they've saved it, and they're listening to us talk about this, and they can see the opportunities that we're talking about, and they want to take that first step. What would your advice be, Saif? And it's a tough question to answer because I think there's a lot of stuff that you could say, but if you could share one piece of advice to anybody who's just getting started today, what would that be?
Yeah, I'd say don't rush into anything. The FOMO that was created in 2021 is only going to lead to people being disappointed, and that's across the different asset classes, not just property in general. So for me, it's not about rushing. So really, really make sure you're listening to as much free content as you can, YouTube, podcast. The amount of information out there is unbelievable, and trying to form your own opinion on things rather than just taking everything that everyone says as gospel. Even what we're saying today, it's taking that and forming your opinion based on other things that you've read and heard and stuff like that. So I think really, really important. Then once you've got all that, try and make a decision based on your needs, your age. For example, if you're younger, get more into trading businesses, take more risk. If you're older, maybe have a bit more capital saved up, start looking at, less time consuming businesses and more investment type of medium-term returns, for example. So really understand your circumstances, your resources, your skill sets, and try and build something around that rather than just going to some, like you said, a course and just having the generic, I'm just going to be buying HMOs or singlets, whatever. It's like, make sure whatever you choose fits into what you want to be able to create or your lifestyle. So that's a really, really important point for people to think about.
Superb advice, Saif. You are one cool cookie, I've got to say. And I think everything you've said today, I'm just from nodding along thinking, 100%, I completely agree. Yeah, I'm with you, Saif. I've really, really enjoyed today's episode. Like I said, it's a pleasure every time we catch up. I could sit and talk about property, for hours with you, Saif. And we're overdue a catch up, so I think we should get that organised. But thank you so much for coming on the show. Thanks for sharing the story, and thank you for all of your advice, knowledge, and wisdom that you've shared today.
Thanks for having me on, Andy. Really, really enjoyed that.